This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Doubts grow. One of the most important oil meetings in decades takes place this weekend. But with billions of oil dollars on the line, will a deal get done?
Tax benefit? Why one of the big financial benefits of homeownership no longer exists for some.
And virtual reality revolution. The stocks our market monitor says are in the thick of this massive technological change. All that and more tonight on Nightly Business Report for this Friday, April the 15th. And good evening, everybody. I'm Bill Griffith, in tonight for Tyler Matheson.
And I'm Sharon Epperson, in for Sue Herrera. We begin tonight with oil and a high-stakes meeting this weekend in Doha. Officials from the world's biggest oil producers are gathering for what some call one of the most important discussions in recent memory. The goal, to reach an agreement that would limit output. Now, if that happens, it would be the first step in curbing production that has resulted in a glut of oil worldwide, has hurt commodity-dependent economies, and has thrown companies into bankruptcy. But as Brian Sullivan reports, reaching a deal won't be easy.
It's a global game of political intrigue with hundreds of billions in oil dollars on the line. Major oil-producing nations gathering in Doha, Qatar on Sunday to try to win a hard-fought deal to stabilize or possibly even cut global oil production. The world is still producing 1 million barrels per day more than it needs, even with American output falling this year. Many of the countries attending the meeting face a catch-22. They desperately need higher prices to fill their budget holes, but they also cannot risk slowing production because they need every dollar they can get. The biggest conflict comes between Saudi Arabia and Iran. The Saudis, along with Russia, reportedly have agreed to cap production at current levels and say they need Iran to do the same. But so far, Iran has rejected any deal and continues to increase exports. Iran needs the money and wants to rebuild global market share. Oil ministers in Tehran also have no doubt recognized that the Saudis and Russians are trying to freeze their own output at near record levels. And if the two sides can put aside long-standing animosity and agree to a production cap, crude oil prices are likely to continue to rise. Oil, of course, not the only place Saudi Arabia and Iran are at odds. Both are fighting in Syria and Yemen with their proxies, and sometimes even with their own troops. In Syria, the Saudis want Assad out. Iran is fighting to keep him in place. In Yemen, Iranian-backed rebels have been fighting with massive help from Iran to push the Sunni-led government out. Both countries, Yemen and Syria, are now in ruins. So while the outcome of Sunday's summit is uncertain, one thing is certain. Every oil-producing company and country in the world will be focused on what happens in a hotel 7,000 miles away from America on Sunday. For Nightly Business Report, I'm Brian Sullivan.
Well, oil prices today fell ahead of that key meeting. Traders and analysts are just growing skeptical that there will be any agreement to help clear that oil supply glut that Brian was talking about. Today, domestic crude settled nearly 3% lower to just above $40 a barrel. And as Jackie DeAngelis reports for us now, where prices go from here is not exactly clear, not even to the experts.
Confusion in the oil markets. That's the feeling of traders heading into a key meeting in Doha this weekend. In a CNBC poll of analysts, traders, and energy funds, there is no consensus. Street estimates have been calling for a price rebound in oil in the second half. Estimates of $60 to $70, some as high as $85. But those polled said domestic crude and Brent will finish the year at $40 to $50, basically where we are now. The upcoming Doha meeting, it could be a short-term catalyst. A little bit more than half of those polled said that they think there's more than a 50% chance that some deal could be reached, although they don't know what it'll look like. And while they say a no-deal outcome will take prices lower, the majority think that oil saw its bottom earlier this year when it got close to $26 a barrel. The most important factor influencing prices right now, still oversupply. That was the overwhelming response. But demand, global risk, and dollar fluctuations, all still key factors. The one thing we do know is that we are in the midst of an oil glut. There could be downward pressure on prices, but nobody knows exactly what's going to happen next. For Nightly Business Report, I'm Jackie DeAngelis.
Oil and gas firm Goodrich Petroleum has filed for Chapter 11 bankruptcy protection, becoming the latest company to fall victim to falling energy prices. Goodrich says it expects to maintain sufficient liquidity during the restructuring process and will be able to continue running its operations. The company primarily operates in Louisiana, Mississippi, and Texas.
Now to Wall Street, where stocks flopped to close the week, pressured by energy shares and that decline in oil prices. Some expected the Dow to take a breather anyway after that 350-point gain in 3 days that we had seen, fueled by the rally in the banking sector. By today's close, the Dow Industrial Average fell nearly 29 points to close at 17,897. The Nasdaq dropped by 7. The S&P was off by 2. But it was a winning week overall. All of the major averages rose more than 1.5% this week.
Now to the global economy. China posted its slowest quarterly growth in 7 years during the first quarter. Gross domestic product in the world's second largest economy expanded by 6.7%. While it's the worst 3 months performance since the financial crisis, the slowdown was expected and the deceleration is actually milder than some had feared.
And one of the biggest risks to the markets worldwide is the possible exit by Britain from the European Union, the so-called Brexit. This week, the head of the IMF warned that there would be a negative economic impact globally should Britain vote to leave the EU. And today, UK Chancellor of the Exchequer, George Osborne, echoed that warning.
I hope the British people vote to remain in, and I think they're getting very clear messages from around the world that there are great economic benefits from remaining in and costs if we leave. If we do leave, then, of course, we will have to deal with that situation. There'll be a 2-year negotiation around the exit from the EU. And, of course, our Bank of England will be alert to the financial stability consequences of that. But, we're clear, leaving would cause an economic shock.
Well, that very important vote in Britain is scheduled for June the 23rd.
And here at home, there are signs of persistent weakness in manufacturing. Industrial production, a broad gauge of output across factories, slowed in March. The decline of 0.6% was steeper than expected. Output has fallen for 6 of the past 7 months. A separate report showed a decline in consumer sentiment, which was lower for the 4th straight month. Experts say the drop reflects the reluctance among consumers to spend freely.
The president of the Chicago Fed says inflation data will be an important consideration for the central bank when it comes to raising interest rates. Charles Evans says that the bar is high for any action when it comes to the meeting later this month, and he would like policymakers to wait until inflation reaches or exceeds its 2% target before hiking again.
Housing is a key pillar of the economy, and part of the reason many people want to own a home is for the tax break. But as Diana Olick explains, that financial incentive, at least for buyers who need it most, is not what it used to be.
It used to be a big factor for first-time home buyers. Owning a home gets you a tax break. Alas, not so much anymore. Not for most young buyers anyway. Near record low mortgage rates and a higher standard deduction make it hard for a lot of buyers to qualify. Here's why. The standard marital deduction has risen from $1,300 in 1972 to $12,600 today, meaning that the first $12,600 of itemized deductions has no benefit to consumers. A typical first-time home buyer buying a home around $200,000 pays less than $12,000 in mortgage interest and property taxes annual. That's not enough to hit the itemization level. Even with other deductions that bring the taxpayer over that $12,600 limit, the tax savings are minimal. Now, the mortgage interest deduction is one of the largest federal expenditures at about $70 billion a year, but it does very little to boost home ownership because it favors wealthier buyers purchasing more expensive homes. About 77% of the benefits go to homeowners with incomes above $100,000. For Nightly Business Report, I'm Diana Olick in Washington.
Well, the spring selling season is in full swing. Buyers are out there looking, but so are the swindlers. They're targeting everyone from land buyers to those looking for investment properties. And as Andrea Day reports now, real estate fraud is on the rise.
When outlandish claims are made about how much money you can make, it does get people's attention.
When it comes to fraud, this former federal prosecutor has seen just about everything.
I was in a case where people signed deed paperwork and it turned out to be invisible ink.
one of many tricks criminals could use to separate you from your cash. In the Silicon Valley, the Santa Clara DA's office says that real estate investment schemes, mortgage fraud, forgery, and rental scams are all on the rise. In just the last decade, skyrocketing from $14 million in losses in 2005 to nearly $98 million in losses just last year. And they're not alone. According to the FBI, the amount of money being lost in real estate fraud nationwide is also way up. The total losses from complaints filed online in 2015 more than doubled from the previous year.
My advice to investors is very simple, and that is, number one, don't take things at face value.
Advice that may have stopped investors before they dumped nearly $500 million into a massive real estate scheme in Texas that, according to Assistant U.S. Attorney Christopher Eason, was nothing more than a fairy tale told by this guy, Thomas Lucas.
Let me finish my question. I was finishing mine.
That was Lucas under oath being sued by a group of investors after Eason says more than 250 handed over cash, hundreds of millions, based on a tip from Lucas's so-called source.
His secret source had inside information about where Disney was planning to expand in the continental United States by adding 6 more theme parks and a resort here in North Texas called Frontier Disney. He sold that lie to hundreds of investors so they could buy land with the idea that once Disney made its announcement, then they stood to make a lot of money.
But that announcement never came, and only some lucky investors were able to pull out of the shady land deals.
Disney never intended to come here. They never were purchasing land to come here.
And he says Lucas's source? Just another tall tale.
Do you know what his position was with Disney? I know he was a vice president of something.
He had a lot of arrogance, and a lot of people who commit fraud crimes do.
So how difficult is it to safeguard your investments? Here's some advice. Consider hiring an investigator to research before you invest. Don't buy into wild success stories or promises of extravagant returns. And last, don't get caught up in big names or name dropping. In the end, Burns says there's nothing wrong with going with your gut.
If something seems way too good to be true, a lot of times it is.
So what could investors in the Disney scheme have done since they were banking on a secret source? Well, according to Burns, if you can't do your due diligence, don't invest. And there's always that simple phone call to corporate headquarters. It's amazing what you can learn. I'm Andrea Day for Nightly Business Report.
Still ahead, how much did the first family earn last year? We have the Obama's tax return.
Well, here it is, April 15th, usually tax day, but not this year. It's Monday instead on the 18th because of a quirk in the scheduling. And while last-minute filers are scrambling, as usual, we got a look at the president's returns today. Eamon Javers joins us now from Washington with a look at the numbers. Eamon?
Yeah, hi, Bill. The president did not need those extra couple days to get his taxes in. Here's his 1040 form filed today and released to the press this afternoon. Let me give you some highlights of what the president earned this year. He didn't have such a bad year. The president reported adjusted gross income of $436,065, total tax of $81,472. That gives the president and his wife an effective rate of 18.7%. Really interesting to dive into this 45-page or so 1040 form because you see a lot of the details here about how the president lives his life, including some of the charitable donations that the president and the first lady have made, and a lot of personal resonance to some of those charities, including to Sidwell Friends School. That's the school where his daughters attend school, and also to the Beau Biden Charitable Foundation. That's obviously in honor of the vice president's late son. So some real personal charitable giving there by the president and the first lady, guys.
What about the vice president's return, Eamon? What did you find out there?
So interesting. When we looked at Joe Biden's returns, here's a guy who made less than his boss, but somehow managed to pay more in taxes. Take a look at the highlights of Joe Biden's return. Adjusted gross income of $392,233. Total tax $91,546. That's about 10 grand more than the president paid, giving him an effective rate of 23.3% as compared to the president's 18.7%. So maybe the president has just a better accountant in the Oval Office than they have over in the vice president's
Well, I would certainly hope so. Eamon Javers, who clearly enjoys reading 45 pages of a tax return. Thanks for joining us tonight.
You bet.
See you later.
Today, President Obama made it clear that he wants to change the way you watch and pay for TV. The White House threw its support behind a rule that would prohibit cable companies from requiring customers to rent their set-top boxes. According to the White House, the president wants better, cheaper versions of the cable boxes that millions of Americans use to get cable TV. And supporters of the proposal include Google, Amazon, Apple. They all want a bigger foothold in the TV market. Meanwhile, of course, the cable industry opposes it.
Then there's one company that has definitely changed how and what we watch on television. That would be Netflix. After soaring more than 140% last year, the stock this year has not performed nearly as well. It's down about 2%. And now the company is making a risky move by increasing prices for some consumers. And as Julia Borston explains now, the potential impact of that price increase may become clearer when the company reports earnings on Monday.
When Netflix reports earnings, subscriber numbers are in focus. Investors are hoping Netflix will top the roughly 81 million streaming members it forecast back in January. The real question is how a price hike kicking in next month of $2 to $9.99 for longtime subscribers will impact Netflix forecasts for its second quarter.
We think with a slowing large U.S. subscriber base, and on top of that, you have a big price increase that's going to impact a large number of their subscribers. There could be greater cause for concern on the U.S. subscriber growth. On the flip side, I think the international side will continue to grow fairly well.
And Netflix's ability to continue to grow both in the U.S. and overseas and to roll out more price hikes hinges on its ability to keep on picking hit content. This year we've seen hits House of Cards and Daredevil return, plus new shows including Chelsea Does and Fuller House. The company is planning to launch over 600 hours of original programming in 2016, up from about 450 hours last year.
I think we're going to see a lot more original content coming out over the course of this year. And I think as long as Netflix can generate really good original content, they've had a very good success rate thus far. And I think that will continue to drive engagement, help reduce churn, and help keep revenues, continuing to grow at the company.
A recent Morgan Stanley survey found more respondents said Netflix, rather than HBO, had the best original shows. That bodes well for Netflix, even at a slightly higher price. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Citigroup reports a steep decline in quarterly profit, and that's where we begin tonight's Market Focus. The bank said loans related to the energy industry and lower revenue from investment banking caused profit to fall 27%. However, that was still good enough to top analyst expectations. Revenue also came in above targets. Shares of Citigroup were down, though, a fraction to $44.92. Charles Schwab saw its quarterly profit and revenue increase from 1 year ago. The brokerage and banking company reported revenue that topped analyst estimates, while earnings fell in line. Shares of Charles Schwab fell a fraction to $28.53. And BATS Global Markets made its debut as a public company today. The stock exchange operator offered over 13 million shares priced at $19 per share. The company attempted to go public 4 years ago, but a technology glitch stood in its way. Shares of BATS surged 21% to $23.
Meanwhile, Costco Wholesale has increased its quarterly dividend to 45 cents a share, up from 40 cents. The yield on that stock is 1.19% now. Costco shares up 1% today to 153.17. And Apple was the biggest drag on the S&P and the NASDAQ today after a report in the Nikkei Business Daily said that Apple will continue to reduce iPhone production in light of sluggish sales. Apple will not disclose its financial forecast for the second quarter until April the 25th. Shares, though, down 2% to $109.85.
And now to our market monitor, who has some tech names he says are poised to benefit from the exploding business of virtual reality and augmented reality. He's Chris Bertelsen, Chief Investment Officer at Global Financial Private Capital. Hey, Chris, the last time you were on in June 2015, you recommended Alps Medical. That's down 31%. Perkin-Elmer, which is down 5%, and Aztec Industries, which is up 11%. Today, you're going to talk about virtual reality and augmented reality companies. But first, Chris, explain to us what's the difference between the two.
Okay, virtual reality is really an imaginary world. It'd be like you view something and a shark swims at you and you cringe and you jump out of the way. Whereas augmented reality is just a little bit different in that you're in the real world, but you have imaginary things that you manipulate. And one is a total imaginary, fictitious experience, and the other one is something that you might use more on a practical basis.
Yeah, we did a piece last night on the program about an augmented reality company taking a look at how you could use that to purchase an oven for your kitchen without really having to get the oven, but you could see yourself in the kitchen with it. You say that there's certain companies that are really poised to benefit here. One of them you like is Sony. Why?
Yes. Well, Sony certainly has been depressed ever since, it was hacked. Although it may not be super cheap, it's certainly a contrary name. However, they've done a terrific job with their virtual reality. There are more programmers writing code for them. They have more apps available. You'll see certainly with PlayStation the utilization of it. I think they're well ahead of Facebook and Google and others as far as pure virtual reality is concerned. Plus, they have a huge library which they can interject into their virtual reality scheme.
Now, another name that is not by any means a pure play in this category would be Microsoft. I guess this is another way that you can almost hedge your bet by investing in a company like this one, right?
Absolutely. Both are sort of risk-off bets to them. Microsoft, and I expect virtual reality to take off starting next year and be a $200 billion business. And who knows, we may get another Apple emerging out of it. But Microsoft is also large in the business. Theirs, of course, is more augmented reality. And certainly with their HoloLens and whatever, they've really done a terrific job of starting off and getting people interested in it, particularly from a corporate point of view. So I would say that they have a big jump in front of the competitors, granted a small piece of Microsoft, although certainly Microsoft is going through a creative destruction process with a new CEO in the company, so I look for progress.
Now, you say HiMax is a risk-on name that you like, and why do you like that name, based out of Taiwan?
Well, yes, HiMax makes for the various goggles and headsets and whatever that have used in virtual reality, used by a lot of different companies that are, in essence, getting into the business. And they make the chips, they make the integrated circuits, they make the electromechanical devices, cameras, everything comes out of that company, and I think they're really posed to explode. Naturally, they're not cheap, and they've had a big run, but certainly if it takes off the way I think it will, you'll see them go to another level over the next few years.
Yeah, I think you also like the dividend there too, Chris. Thanks so much for joining us. Chris Bertelsen with Global Financial Private Capital.
All right, coming up, sold out. Why one retailer's strategy is actually centered on upsetting some of its customers.
Here's a look at what to watch next week. On Monday, Dow component IBM reports earnings, followed by other blue chips later in the week, including Goldman Sachs, Johnson & Johnson, Intel, and United Healthcare, to name just a few. On Wednesday, we'll get an update on the spring selling season with a report on existing home sales. Thursday, the European Central Bank meets, and that's what to watch next week.
Meantime, the Department of Homeland Security has sent out an alert to Windows users. If you have Apple QuickTime installed, you should uninstall it. Apple pulled support for that software, and it is not issuing an additional security update on that. And the lack of updates means lack of protection, making it easier for hackers to access your computer.
And General Motors is recalling 1 million newer trucks for faulty seatbelts. The largest U.S. automaker said the recall covers 2014 and 2015 Chevrolet Silverado and GMC Sierra 1500 pickups. GM says there have been no reports of crashes, though, or injuries.
Well, Target is doing it again following last year's wildly successful Lilly Pulitzer limited edition launch. This Sunday, the retailer is selling a line of Marimekko goods. The items are expected to sell out quickly, leaving a lot of customers empty-handed and fuming. But as Courtney Reagan explains, that's all part of the plan.
Fashionistas across the country are drawing up their shopping game plans ahead of this weekend's Mary Mecco for Target launch. Target's latest designer collaboration with Finnish designer Mary Mecco launches in the early morning hours Sunday on Target.com and in stores when doors open. There are more than 200 colorful, patterned apparel and outdoor items in the collection, most for under $50. And like all of these collaborations, once the merchandise is sold out, there's no replenishment. It's all part of the strategy. Scarcity makes it more special. Retailers like H&M and Target intend for these designer collaborations to sell out in weeks or less. Last year's Lilly Pulitzer for Target sold out in one day. But even then, these collaborations are never big enough to truly move the needle for these big retailers. The goal is to generate buzz. Target says the buzz so far is terrific and that the retailer is really pleased with the early shopper excitement, but it remains to be seen how that will translate to sales. The challenge will be how well Target's website performs under heavier than normal traffic. On both Cyber Monday and when Target's Lilly Pulitzer collaboration launched last April, its website buckled under the traffic, leaving many unhappy customers with empty shopping carts. For Nightly Business Report, I'm Courtney Reagan.
And before we go, let's take a look at the day and the week on Wall Street. It was a quiet day today. The Dow fell nearly 29 points to 17,897. The Nasdaq dropped 7, and the S&P 500 was off 2 points. But it was a winning week. All of the major indexes rose more than 1.5%. So a pretty good week here. That's Nightly Business Report for tonight. I'm Sharon Epperson. Thanks so much for watching.
And I'm Bill Griffith. Have a great weekend, everybody. We'll see you again on Monday.